Hi, this is Randy Finney with Right Side of the Chart, and this is a almost closing market wrap for Friday, March 5th, 2021. By almost, it's about 40 minutes before we close, but I just want to get a video out before the close today, give you my thoughts, show you what's happened, and maybe what to look for next week. All right, so again, we'll keep it quick, otherwise I won't get it published before 4 o'clock. What happened? We hit my first target almost to the button. That is the low of the day in QQQ was 297.45. The target was at 297.02. Remember, these are actual support levels. I say this often. If it says T1, I've gotten away from the official trades lately, just throwing trade ideas out and sharing my convictions on those. But unadjusted targets, you always want to cover a little before the actual support level. Now, I did say we could possibly overshoot it today if we had a lot of momentum going down, but it was a more of an orderly drop this morning. You can see we're just kind of limping down, hit that target right there, just a hair above 297 and reversed. And so that's it. So T1 hit. As all the scenarios had drawn, that's where the arrows were going. Come down to that level. Let me get my arrow tool here. Come down there after the breakdown. Actually, I'm sorry. I keep calling it T1. It was T2. 314 was the first target. We hit that there, consolidated on the first target for a while. Came down now, hit T2, and that's the bounce. So I have a bounce range going from about right here, which we're a little bit above 305, up to that, this is big resistance. There's that consolidation zone. So this is a level a lot of eyes are watching. Wouldn't be surprised at all to see poke a little bit up into it. We've had a couple moves in and above this level. So that's about it. That's about where I expected the bounce to go. And look, here's how it works. I have a potential third and fourth target. And all I can say with the highest degree of confidence, whether or not the next target will be hit, is if we take out 297. It was the second target. It was support. There's an expected reaction when we tag it. I still think it'll be hit based on everything that I've covered before in recent weeks, excessive sentiment, the charts, the breakdown here, the divergences on the weekly, and everything else. But this is the bounce, and that's where it could go. I mean, look. We'll see next week. I'll pick this up on Monday. My conviction on how far it goes isn't very high, but that's it. There's about 311. And there's also some, in addition to that line there, as I'm looking, as I put the crosshairs, there's some other support there. So it's a pretty decent, or former support now resistance, pretty decent level. So let's just say this is, at this point in time, my preferred bounce target area where we'll probably stop, and it meshes with the previous arrows drawn. Now if we get into that trading range and we go much above it, well, the top of the trading range becomes the next resistance, and then the gap up here. I'd put much better odds, not 50-50, way better than 50%. It's hard to give a number. Let's say 70%, that this is going to be it. In other words, the bounce off T1, that's it for today, and I think there's a good chance next week we'll go down, take it out. We could even drop, futures could drop overnight and then gap down below it. I say that because it's just the corrections are usually very tricky, and they like to trap longs. On the flip side, a case was made, and to hedge up or do pure play longs on the stocks I showed were at support, such as Microsoft. There it is, up 2.5% today, and that's even more off the lows where it was this morning, and where it was highlighted yesterday. It's just dipping down into support. What were some of the other ones I mentioned? I think Amazon today on that 243 support, not up big, but it's up. Tesla already broke down, so that one was a breakdown, and that's it. See, this is one to look at. This is an objective short, because it broke down. It was a solid breakdown. Unless the stock really rallies hard into the close today, it'll probably close on or around that trend line, and that gives you an objective short entry for back test down there. However, is Tesla going to do this if all those other stocks go up and the market goes up much beyond those levels I showed you, the overhead resistance levels? No. So, this could be a whipsaw on Tesla, and if so, if it regains that trend line, that's going to be bullish. If it regains 662, that's going to be bullish, and that downtrend line. So you have a confluence of resistance here. So again, a case can be made to be short Tesla. I wouldn't go aggressive right now based on the fact the market just hit support today and it's bouncing. But if you're short, or you're staying short, or you want to add to a short, maybe a partial position, and then wait to see the market roll over next week. And if it doesn't do that, and you are short, you want to cover if you break above 662 in the downtrend line, and that's also an objective long entry. A bull can go long if it recovers the trend line, and then again if it recovers 662 plus the downtrend line. That's a pretty, it's a confluence of resistance, so quite bullish if taken out. But again, as I like to say, resistance is resistance until unless taken out, and there's a lot of resistance overhead on Tesla. The other ones mentioned Walmart. Nice reversal stick today, and that's a bullish engulfing stick. You want to look for them after an extended downtrend, and you want to see the body, a big green candlestick, engulf the body of the previous candle. In fact, we engulfed at least that one. We could engulf the other one as well the day before. And I think that was it. I mentioned Home Depot too, and boom, hammering right off that 247 support. So glass half empty, glass half full. Well, I maintain what I said. Those are objective longs. One option too, if you're just, these are small gains, we're talking 1-2%, but you could keep a tight trailing stop if you are using these as hedges or a pure play long. But if you're a swing trader or a longer term investor, I still like a stop below the, a little bit below the recent lows there. And again, just to flip back to the markets, nothing's changed on my near term outlook, and I do favor that I believe this is just a counter trend rally, whether it's a one-day wonder and we'll move down first thing next week, or we have a little more upside next week. And again, I'll keep you posted. We'll wait and see what happens. If anything big happens by the end of the day, but it's Friday, I try not to take too much into last minute position squaring on a Friday. There's a lot of traders, active traders close positions out for the weekend. What else do I want to show you? Oh yeah, NQ. So we see almost a near perfect tag of the second target, 297 on QQQ, and then NQ, the Nasdaq 100 futures, same levels. These lines have not been modified. On that 60-minute time frame I've been highlighting for weeks, the maximum target I had down there was 12,230, and we hit that almost to the button. The slightest overshoot, but almost again. I think the QQQ came within 1/10 of 1% of that target. That's probably around the same right there. And we did so with a little small but pretty steep divergence right there. And so far the catalyst for this counter trend rally. So there it is, 60-minute divergence on both PPO and RSI. Last time here I told you we only had it on the RSI, no divergence on the PPO. This time we have divergence on both, and we hit my, the final near-term target. Depending on what happens next week, we'll zoom out and start looking for additional targets if it looks like we're going to roll over beyond what we hit today. That's just a longer term chart there. And then we'll just wrap up here with the QQQ 60-minute chart. I showed you the NQ 60-minute chart we were just looking at. QQQ has also has divergence on the RSI on the 60-minute. This is what I call AD, or almost divergence. It's almost equal but a slightly lower low, close enough that we'll call it an equal low on the PPO with lower lows on price. So there's 60-minute divergence on the futures and the ETFs, which we didn't have, was it yesterday? Somebody had mentioned, and I didn't see it in the futures yet, but now I do see it on the futures and the ETFs. Let me just actually look at SPY real quick, a bit comprehensive. Small caps are going to follow large caps. So, but no, we don't really have it. We made a slightly lower low on SPY, on the RSI, and absolutely no divergence on the 60-minute chart of SPY, which helps me to favor more downside there. And then IWM, again, small caps will somewhat follow the large caps. They've been leading for months, but no divergence there on the 60-minute chart. So this is one more reason that helps to support the case. More downside, because usually when we start what is now I think becoming apparent to most as a real correction, not just a regular dip, those corrections often, not always, but they often end with positive divergence, just like it did back here. That last drop there, and there might be a few small ones. Yeah, there were along the way. There was a nice little small divergent low right there. So those are things I look for. They are not an absolute must to end a correction, but they're certainly, for me, a heads up and time to either start booking profits on shorts or getting long, especially when that divergence comes down to a support level. So let me just draw out a scenario here. For example, on IWM, here's a nice support level. and target about 205. It says 204.89. I don't know if you can make that out. So we'll call that 204.90 or 205. Remember, you're talking a 200 point security, so 10 cents is hardly anything. So one example would be if we hit that, let's say we rally up a little, we go on back test this trend line right here, which we just recently broke, and then have another thrust down. That would at that point give us potentially give us, it would bring first the rally up to back test the trend line would bring the PPO and the RSI up, then it bring it back down, and we could get some positive divergence there, and then back up like that. So that's one of the few things I look for, and quite often that things will pan out that way. So there it is. Now, do we have to backtest that trend line? No, we're right now at resistance 215.80. You can see that's a line that was a target I had there before in IWM, and so this we could see this could be it. I'm gonna wrap up here. I'm probably gonna cut out early for the weekend. But one thing to watch for is either a big rally or a dump into the close. But again, I have to caution: don't read too much into it. Sometimes you'll see a big rally or a big dump, especially on a Friday, and it doesn't necessarily correlate to what will happen on Monday. But it may give us a heads up of the supply-demand dynamics. There are a lot of trap longs that are now realizing, oh wow, these market-leading FANG stocks, Apple and Facebook and Tesla and Amazon, everything that I've talked about for weeks now, boy, they're really, they're in a downtrend, and you might get some profit taking. So we'll look for that. If anything big happens between now and 4 o'clock today, I'll try to get an update out, later tonight or over the weekend. But otherwise, let's just pick this up where we left off, or we'll pick it up on Monday, and that's it. The bottom line is that target was hit today, meant that was no longer objective to add shorts. If anything, it was objective to cover shorts and go long for a quick bounce. Or again, it's how you're seeing things. If you think that's it for the correction and this market's going to new highs, like I know the vast majority of market participants and analysts and just about everybody out there is calling for a big 2021, then that's where you step in and buy. And if you believe that we're going to take another leg down, well, you can start scaling back into short positions right here about where we are, all the way up to really the top of the trading range. If they take out the top of the trading range, it is certainly possible that we could go up and then back down, but that's really what I'd prefer to see based on just everything that's happened recently. I think that would be the maximum upside to keep a pretty strong pretty strong convictions on a bearish case that we are going to go, that this is only the beginning of a deeper correction with more downside to come. All right, I think I've made my thoughts clear, and if not, just drop any questions you have in the comment section below, and I'll try to get back to you as soon as possible. Have a great weekend.